Hi, this is a tax resident, and today we're diving into an exciting and updated topic: Portugal's new non-habitual resident tax regime, also known as NHR 2.0. We'll cover the key benefits, eligibility criteria, and differences from previous regime, and give you some practical examples. Key benefits of NHR 2.0. The non-habitual resident tax regime in Portugal has been updated in 2024 to NHR 2.0, also known as IFICI. This new regime builds on the old NHR system, while introducing some important changes. There are several key benefits: a flat 20% tax rate on Portuguese-sourced income from specific high-valued professions, tax exemption on most foreign-sourced income, including pensions, dividends, and interest, enhanced incentives for investment in green technology and renewable energy sectors. These benefits apply for a period of 10 years. Differences between old and new regimes. Now let's highlight the key differences between the old and new regimes. Foreign pension taxation. Foreign pensions remain exempt, but there is increased scrutiny on the origin of the pensions. High value-added professions. The specific professions eligible for 20% tax rate have been updated to reflect current economic priorities, particularly in tech and renewable energy sectors. Investment incentives. NHR 2.0 introduces new incentives for investment in green technology and renewable energy, encouraging sustainable development. Application process. The new regime has a more streamlined application process with enhanced digital services to facilitate faster approvals. Eligibility criteria. To qualify for this regime, you must meet certain criteria. You must not have been a tax resident in Portugal in the 5 years prior to your application. You must become a tax resident in Portugal. This typically means spending more than 183 days in Portugal in a year, or having a permanent home in Portugal by December 31st of that year. Once you meet these criteria, you can apply to the Portuguese tax authorities to be recognized as a non-habitual resident under the new regime. Examples: Maria is a retired doctor from the UK. She moved to Portugal in 2023 and became a tax resident. Under the NHR regime, her UK pension would be exempt from Portuguese tax for 10 years. John is a software engineer from the US. He moved to Portugal in 2023 and qualifies for NHR 2.0. His salary from a US-based company is exempt from Portuguese tax, and any income he earns from Portuguese clients is taxed at a flat rate of 20%. How to apply for the NHR 2.0 regime? Applying for the NHR 2.0 regime involves a few steps. Register as a tax resident in Portugal by obtaining a Portuguese tax identification number. Submitting an application to the Portuguese tax authorities to be recognized as a non-habitual resident. We recommend you to consult with a local tax advisor to ensure your application is completed correctly and to maximize your benefits. Important considerations from us. Ensure you keep detailed records of your residency status and income sources. Always be aware of changes in tax laws, both in Portugal and in your home country, that could affect your tax situation. Consider your long-term plans, as the NHR 2.0 regime benefits are only available for 10 years. Explore investment opportunities in green technology and renewable energy to maximize your benefits under the new regime. And that's it! I hope this video helps you understand the differences between the old and new non-habitual resident tax regimes in Portugal and how you can benefit from it. If you found this information useful, please give it a thumbs up and don't forget to subscribe for more tips and insights on international tax and finance, and stay informed with Tax Resident. Download our app Tax Resident and be safe and under control of your tax residency.